So welcome everyone to our new webinar about the payment service regulation and how to anticipate it better. So today we're going to divide this webinar into 6 different parts. So the first part will be dedicated to identifying and explaining you the main PSR impacts. Then we will deep dive into 2 specific of those impacts, which are the permission dashboards and the regulatory APIs. Then we will move on to verification of payee topic, which you will see can be a bit tricky. And then we will close with the FIDA regulation on open finance, the true open finance regulation, and wrap up through actually how to anticipate all of those new regulations. So to support you today and guide you through this webinar, I will be with 4 other people. So Andrea, who is Financial Services Director for Italy, Christophe, Consulting Director from Belgium, Michel, who is the Director of the CSS Vertical Lead Banking in Germany, Olivier, who is working with me as an enterprise architect at group level for the financial services, and myself, Director of Offers and Innovations for the financial services vertical at Sopra Steria group level. So it's a rainbow webinar to give you a true European vision on this European regulation. So first, let us go through some of the main concepts. So today we are in the era of what we call open banking. So open banking was introduced in PSD2, in the PSD2 directive in 2018 already, and it introduced 2 different use cases. The first one is payment initiation, and the second one is account information, so accessing to the account to share information. So there we've seen that it was maybe a quiet start, we would say, with a few uses, but now it's really gaining traction, and in France we observed a tripling of users between 2022 and 2024. So to make it clear, PSD2 was about payment initiation and account information, but it's also the case of PSD3 and PSR. So the scope is not changing. We are still in the open banking era. However, this is not the vision of the regulator. The regulator wants to go further, and he wants to introduce 2 new concepts. So the first one is the open finance concept, and this is what FIDA regulation is about, and we will deep dive into this. But this is really the access to all kinds of financial products. And the future vision, which will be the ideal vision of the regulator, would be about open data, meaning we go even beyond financial services products, but also to address telcos, healthcare, tech, whatever data the customer owns, to share it and give back control to the users. So to make this vision becoming a reality, the regulator started in 2018 with PSD2, but we do have some challenges that remain. First, we lack of fluidity in terms of customer journeys, with a lot of obstacles, a lot of journeys that don't go to the end. Second, PSD2 was actually voted before the GDPR. So you do have a bit of a discrepancy, and the customer protection was judged as inefficient by the European regulators. And last but not least, because PSD2 is only about payment accounts, you do still have web scrapping, meaning like a robot accessing to your accounts through your credentials, on accounts outside of payment accounts, meaning that it's not as protected as an API. So the regulator decided to go with a new package of regulation. So starting probably this year with PSD3 and PSR, so it should be voted in the second half of the year. So again, does not change the scope of PSD2, but introduces harmonization for PSD3. And for PSR, a lot of new rules, and especially a new permission dashboard that is quite impactful for the bank. And above all, and I would say probably the main impact for you banks, is the penalties, with up to 7.5% of the consolidated turnover if there is like a no respect of some of the articles, the main articles of PSR, but we will get through this right after. And then we have FIDA. So FIDA, we explained it, is really going further and making sure that we have APIs on all of the financial products. This is a bit more future forward. It's not going to be voted before 2026. Also, we'll get back to this at the end of the webinar. The governments will be way different with what we know today. Is more like the regulators say that we have a rules to respect. We respect the rules. Tomorrow, it will be up to the market to define the schemes, the data formatting. You'll have also opportunity for monetization. So it's a whole different organization, which is why it will take time before it's actually voted and implemented. But until now, what is discussed at European level is that penalties will go or could go up to 10% of the consolidated turnover. So it's even higher than the PSR sanctions. So that was for, I would say, the broader image. Now we really want to deep dive into PSR because it's coming very soon, could be voted in the second half of the year. And I pass it on to Christophe to explain us the top 5 impacts of PSR.
Thank you, Marine. Thanks a lot. So indeed, let's go a little bit deeper into the impact, and I will call it, this is a kind of helicopter view of all the impacts that you can see. Some are more technical, some are more operational. So let's go through them. So the first one, as you mentioned, is the permission dashboard. So this is completely new. This is a new requirement that is introduced in the PSR, but it was not in the PSD2. So the main objective of this permission dashboard is to ensure that account holding institutions provide additional information to their customers with a dashboard that contains clearly displays which third-party providers, so the TPPs, have access to the banking data. Currently, it's not the case. For what purpose? Is that a credit? Is that something else? So they need to mention that. But also for how long? So what will be, or what is the current duration of each permission? So by third-party providers, so the TPPs, they include now not only the account information service providers, so AISP, but also the payment initiation service providers. So additionally, to this permission dashboard, must also allows users to categorize and manage the type of data being shared. But I will not tell you too much about this because we will explore the permission dashboard a bit further on with Olivier with a very concrete example. So the second impact relates to APIs, so which is a little bit more technical. So that was already an important element of the PSD2, but now PSR significantly extend the requirements on how this PSR should work. So the main goal is to simplify the customer journeys through easier authentication for better user experience, and ideally also standardizing the APIs across the markets. So exchanging better and more information into the market. Following the goals of the different working groups, PSR explicitly identifies 12 obstacles that must be removed or adapted to make open banking more effective. So we'll come back to these obstacles in a dedicated session a bit further, so I won't go into more details. Concretely, the overall objective of this API update is to facilitate interoperability between the banks and the third parties, the TPPs. So the third one is customer authentication. So indeed, SCA was already one of the cornerstones of the PS2. PSR now aims to improve and extend the scope of customer authentication in several ways. Let me go through a couple of examples. So the first one is the scope extension. There is a clear scope extension with the clarification of use case application like mail order and telephone order, so the famous MOTO, or the merchant-initiated transactions, so the MIT, that were previously inconsistently handled by the PS2. Some example, MOTO transactions are now in the scope of the customer authentication. Merchant-initiated transactions, like subscription, for example, or deferred payments and recurring payments will also be regulated by the PSR. So a very clear scope extension. Another element is a stronger authentication controls for risk transactions. Risk transactions considered with high risk will require reinforced authentication measures. For the use of the new technology as well, the regulation explicitly promotes the use of biometrics to improve security and user experience. And the last point is the simplification. Yeah, indeed, they come also with some simplification. So under PSD2, banks had to combine two factors from different categories. So something you have, something you know, something you are. PSR will not allow the use of two factors, but from the same category, making client authentication easier to implement and more user-friendly. Concretely, this means that customer authentication will become more applicable, easier to use, and better aligned with real-world use case, like the biometric, for example. So another important impact is also the client protections. This is clearly one of the key elements of the PSR. The regulation significantly reinforces the user rights, especially when it comes to transparency and refunds. In many cases, reimbursements must now happen almost automatically, and in some cases, within 24 hours. It's a major shift towards proactive customer support. That was not the case until now. The last impact is the fraud prevention. It's a critical area that PSR has deeply reinforced. Banks will face great responsibility and direct accountability when fraud occurs. This regulation will require more reporting obligations, mandatory employee trainings, and stronger process to manage fraud. We will come back into that a bit later on. And don't forget, so the most important part, so PSR allows financial penalties up to 7.5%. Marine, you told about it. So in case of major violation and non-compliance. So 18 months is therefore pretty short when considering those impacts from the regulation.
Yes, indeed. Thanks, Christophe. So you mentioned 5 impacts, but the Article 50 of PSR also mentioned a check between the unique identifier and the IBAN, which we can call VOP. And you didn't mention VOP as one of those main impacts. Why?
Yeah, indeed. The Article 50 aligns with the instant payment regulation. So the real deadline is in fact October 25, so not the 27th. So at the end, we see that VOP, so verification of payee, more as an IP regulation impact than a real PSR one. But anyway, it's combined at the end.
Yes, yes. Thanks. And indeed, we will get back to this difference between PSR and IP regulation and VOP at further away in the webinar. But definitely also maybe an impact to consider. But before we go back to this, maybe let's deep dive into the 2 last impacts that you mentioned, specifically starting with client protection and especially those new reimbursement deadlines that you mentioned.
Yes, indeed. Pretty new. So it's related to the Article 56 and 59 that are indeed related to the new reimbursement deadline. So it's also one of the most important changes in the payment regulation. We have here a real shift in how customer rights are defined, especially in the context of unauthorized or fraudulent transactions. Let me give you a few examples of this new reimbursement deadline based on these 2 articles, without going into much in the details, but we catch 4 different examples. So if user reports, for example, an unauthorized transaction, the bank should reimburse the full amount immediately or at least on the next business day after the claim is received. Another one, if the bank suspects frauds but needs time to investigate, there is a maximum of 14 days to return the funds to the customer. In case of internal fraud, for example, an employee commits a fraud, so the bank must reimburse the client immediately and should report the incident to the authorities. In case of authorized fraudulent operations, there is a 10 days deadline for refunds. So all of these illustrations shows how PSR shifts the liabilities onto the banks. And additionally, most refunds must happen before investigation are completed. So this was partially true under PSD2, but now with PSR, this reinforces and clarifies those rules to improve customer protection and reduce volume of claims.
Okay, so we understand that customer protection is definitely at the core of PSR, but it somehow goes hand in hand with fraud as well, because if you have less fraud, well, maybe you need less reimbursement to the customers.
Absolutely. So the best way to avoid having to reimburse customer that we just addressed, it's also a way to avoid and fight against fraud. So of course, fraudulent activities will always happen. But the goal is drastically to reduce as much as possible those frauds. So to do that, the PSR identifies four different levers that the banks must act on. Let's go through them quickly. So the first one is the obligation of active prevention and targeted blocking. So what does it mean concretely? So real-time detection and blocking of suspicious transaction is now mandatory. Biometric can be used, and all preventive actions must be logged and auditable. So another one, another lever, it's about information sharing. So standardized fraud database will be created and shared in real time for collective intelligence. This can be very powerful. So PSP, TPPs, and banks will become co-responsible for fraud detection. The third lever, so stronger reporting and burden of proof. It's also much clearer now with the new PSR. So banks must now prove strong customer authentication in disputes. So there is also clear documentation that is required for any reimbursement refusal, and information logs must be precise, regulatory ready, and preserved. The last one is about the training and the awareness. So annual fraud training will be required for all operational staff, and the clients must be regularly informed of evolving fraud risk. So overall conclusions of this, PSR transformed the fraud preventions from reactive to proactive and significantly raised the standards for operational vigilance and transparency.
Well, thank you very much, Christophe. I think now we understand better the different impacts of PSR, and fraud is definitely at the core of PSR. But another topic that is also key in PSR and very much new for all the banking actors and the financial sector is the dashboard. So the permission dashboard. And Michel, over to you to explain us this concept of permission.
Thank you, Maureen. So let's take a moment to understand how PSR changes the way user consent works. As my colleague Christophe already mentioned, the permissions belong to the top 5 major PSR impacts. Under PSD2, consent was typically binary and global. Once we gave our approval to the third-party provider, gained access to the entire payment account. The problem was this consent was often vague and it had no clear visibility into who had access, for what purpose, and for how long. With PSR, we moved to a new paradigm. Consent is replaced by permission. So what does it mean in practice? Permissions are now defined by 4 key elements. The type of data being processed, for example, income history or transaction details, the duration of the access, which is limited to 180 days, the actor, meaning the specific third-party provider granted access, and the purpose of the data use. For instance, checking authorization for a loan or offering budgeting tools. These permissions, which the user have given, must be traceable over time, verifiable by the bank and the regulator, and securely enforced by the infrastructure. In short, PSR brings a shift from vague consent to clear, verifiable, and user-controlled permissions, one of the major improvements in the regulation. To make this model work in practice, PSR introduces the concept of a permission dashboard, which becomes a mandatory interface for all account holding institutions. This dashboard must be simple to use so that any customer can understand it. It must be complete with all relevant information visible at a glance and easy accessible through the user's usual digital channels. So what must this dashboard contain? At a minimum, it must display name of each third-party provider with active permissions, the accounts concerned, the purpose of each permission, the period for each permission is valid for, and no access is allowed without explicit verifiable permissions. Third-party providers are now fully accountable for the correctness of their access request. They must ensure each permission is justified, limited in scope, and clearly documented. They are responsible for verifying that their permissions match user intent and remain valid over time. Any misuse or access without proper permission constitutes to a regulatory breach, which my colleague Christoph already mentioned. This shift from vague consent to auditable, user-driven permissions is a major leap forward for user empowerment, data protection, and trust in open banking. Handing over to my colleague Olivier, who can show us how this looks in practice.
Yeah, thank you, Michelle. So in order to make this a bit more practical and that you can really feel what it means in terms of permission dashboard, we created some prototype. So with this first prototype, here I will use one which is in a mobile prototype, which starts with a PFM application. It's Finari, by the way. We took finally look for that. And we will first create a permission by connecting one account to this application. So I have to select the account I want to connect to the application. I choose an automatic synchronization to this new API or the PSD2 APIs, and I select my bank in a list of a bank. Then I will accept to synchronize my bank through Tink. Actually, Finari is using an aggregator, which is named Ting, to do the interaction with the bank. First thing I have to do is to select the category of data I agree to share with Tink and then with Finari. So I select a few one, and then I move to the next step where I have to select the duration of my permission. And here I keep 6 months, which is the maximum duration in PSR. And then I will be redirected to my bank application to really give my permission to Tink to give the access. So now I'm in my bank application, I'm connected to my bank, and I see this request to give access to my data to Tink, for which purpose, which category of data, how long, and I agree to share information for this account. I have to confirm to my Face ID, and now it's done. I gave my permission to Tink to access my data. I'm back in Finari application, and then thanks to this access, via Tink, Finari will collect the information on my account and will be able to build this such dashboard with the list of my transaction, my balance, and the list of transactions, which are categorized based on the category I agree to share. And then there are some other or private categories because I didn't agree to share these categories, or maybe they are private for privacy reasons, GDPR, and so on. So that's what Finari can do thanks to the permission I created. Now I move to my bank application because I want to see this permission dashboard and the permission I created. So we added a link to a permission dashboard to this menu. And here I will see the list, first the list of TPP to which I granted a permission. And then for each of them, I will be able to see the list of active permission. So if I click on Tink, I will see the list of permissions I gave to Tink, starting with a payment initiation, should be a recurrent payment, and some are expired, some are still active. And I see the new one, which purpose account aggregation with the category of data, with the duration. And I can see, imagine that it exists for a while, so I can already see the history of access also. And I can revoke it. So here I decide to revoke it, and then it's automatically revoked and communicated to the bank. Because one of the key elements also is that this action must be communicated real time to the TPP that cannot access anymore to my information.
Well, thank you, Olivier. So now back to our presentation. We understand better what a permission dashboard looks like. And moving on maybe to the second impact, technical impact that we mentioned at the beginning of the webinar with Christophe, which are the regulatory APIs. So to start with this topic, maybe just a striking figure. And so why they decided to really come with new requirements in terms of APIs? Well, because it's actually not working that well. So on the French market, we had an analysis performed last year, which showed that 56% of the payment initiation through open banking APIs actually fail, which is a lot. Hence why an Article 44 of the PSR to really try to remove those obstacles and make that this 56% can turn into less than this in the future. So now over to you, Olivier, to explain us those 12 obstacles.
Yes, so these 12 obstacles come actually from a paper from the EBA that was published in June 2020, where they gather some remarks and comments from the membership, and the regulator summarized these comments into these 12 obstacles into the Article 44. So we classify these 12 obstacles in 4 areas. The first one is about customer journey. The objective is to simplify the customer journey. So he can use the same credential he used to use for other interfaces. It should be as automated as possible with no need to re-input some data and so on. So that's the 3 first points about simplification of customer journey. Then we have TPP relationship. We have 2 points related to also the simplification of the relation between the TPP and the bank without needing unnecessary information or really simple registration. The third part is about payment initiation. So we have 2 topics which are related to the fact that it should be possible to create any kind of payment. So not limited to a list of beneficiary, whatever the recipient is, in other words, and to any kind of payments, including international ones and so on. That's the third category. And then the last part, which is maybe the more important one, is related to the authentication. So the SCA we already introduced. Here also the objective is to simplify the SCA, to avoid having multiple SCA for one payment, to let the user choose the way the SCA is done, so to not limit to one method of SCA, and so on. So that's basically this objective is to simplify and allow the user to connect and to give permissions and authentication.
Okay, so now we've seen the 12 obstacles, but actually you also have Article 35 to 42, which also stresses some new requirements on interfaces.
Yes, so this article really lists a comprehensive list of requirements regarding the interface, so the access to account and initiation of payments. Actually, these articles are not completely new. They were already existing in PSD2 and the RTS, but here there are some stuff which are more precise, there are new requirements and assumptions. I won't go into the detail because it's a bit long, but 35 is about, for example, the need to have clear documentation with the obligation to inform about changes at least 6 weeks in advance, the facts of having sandbox and so on and so on. 36 is about interface requirements with this idea of equivalence of interface, which is really important, is that the fact that if I can have access to a data through my usual web application, I can have the same level of information to the PSR interfaces. That's actually the 37. The 36 is about same level of performance and same level of SLA actually. 38 is about contingency measure. In PSD2 and RTS, there was a mandatory requirement to have a fallback scenario always active. Now with PSR, this fallback scenario is still needed, but only in case of issues actually, and not always available. 39 is about derogation, which are more clear. 40 and 41 are about more specific topics related to the 2 services, but basically main idea is about equivalence regarding the other way to access the data. And 42 is about access restrictions. So it's a possibility for a bank to block a TPP, but it has really to be justified, for example, in case of fraud.
Okay. Well, thank you very much. I think we understand this impact on APIs more now. So let's move to a topic that we really touched upon very briefly at the beginning of our webinar, which is the verification of payee, and to understand a bit what is driving verification of payee in between PSR and IPA, maybe starting by understanding what VOP is. Over to you, Andrea.
Good morning, and thank you, Marine. Let's now talk about the topic that you have touched just before, the verification of payee or VOP. As we know, the European Commission wants to encourage the use of instant payments. That's why they made the instant transfer free. But this can only happen if trust and security are guaranteed. And this means making sure that you do the payment to the right person. This feature, included in the PSR, is actually already formally introduced in a different regulation that's called the IPR, or Instant Payment Regulation. As you probably know, the IPR has already been voted and adopted, and is currently being implemented across the European Union. It provides a clear compliance timeline for the rollout of VOP across different types of financial institutions. But since PSR has mentioned VOP specifically in the Article 50, it can create a little confusion. It's likely that both regulations will converge in the end, hopefully. And we say that VOP aims to match the account holder's name with their IBAN before a payment is executed for all transfers, not just for payments or the instant ones. Up to now, we know that VOP involves 4 main steps: collect, match, notify, and execute or cancel. In the collect phase, the payer enters the IBAN and the recipient name. In the match phase, bank compares the name with the account holder, and we can have 4 possible outcomes: match, close match, no match, or impossible to verify. In the notification phase, payer is informed about the results, and he can decide in the 4th phase, so execute or cancel, if to execute or cancel the payment itself. Let's be more specific about the feedbacks. In the match phase, the account names and the IBAN fully correspond. That's easy. The payments can be done smoothly. In the close match, there is a small discrepancy, like, for example, a typo. The bank still believes it's likely the right account, and the user can decide to continue. In the no match phase, instead, the name clearly doesn't match with the IBAN. It means that the user is warned and strongly advised to cancel. In the last phase, so the impossible to verify, bank lacks enough information to make a decision. User must manually confirm or stop the transfer. This is a real-time check, and it's a crucial safety net. It has been designed to prevent fraud by ensuring payers knows exactly who is sending the money to. Saying that, from October the 9th, 2025, VOP will be required for loan transfer, including non-instant ones. And this means that this will be a big impact for banks. Olivier, can you explain better this concept?
Yes, sure. So you'll see, I will start with the impacts on the user experience. So you understood that you need to interact, and the customer has to be informed in case and notified about the result of the check. So that means that in any customer journey, in any screen, in any application where the customer can initiate a payment, we need to manage this VOP and this notification and let the user decide to continue or not. So there is an impact on all the user experience, all the user screen. We can also think to an impact on the beneficiary management. It's not strictly required by the regulation, but it could also improve the user experience by already doing the VOP check when the customer is managing his beneficiary list. Doesn't mean that you cannot do it anymore afterwards, but it's just to improve the user experience. Then there are impacts on the backend services, more the backend level, and depending on the role of the bank. If you are the bank of the ordering party, you need to interact with the other bank somehow to do the control. And this will be done most of the time through what we call the RVM, so routing and verification mechanism, and that will redirect the request to the right bank to do the control. That's one main impact. And the other impact is, of course, if you are the bank of the beneficiary, you need to have the service that can do the match, control the two names, that the ones you receive, and the one you know, and provide the answer to the request. That's the main impact at the back end. Maybe one more impact, which is also important, is that you understood that the user takes the final decision. So he can decide to go on even if there is a no match. So you have to store this information. You have to store the fact that the customer took a decision to continue even if you warned him that he should not. Because if there is an issue afterwards, you have to prove that it was the customer decision and not the bank decision. And in the end, there are probably some compliance stuff to control. Who is responsible of that? One point that could be a bit tricky is that for legal entities, when you compare the name, you may have to manage different names, the legal one and potentially several commercial names. To be able to do the matching, you need to know all these names in your customer database to be able to do the matching correctly.
Perfect. So now we understand a bit what is VOP, what will change from October already, and maybe how PSR will converge. So we'll move on to the next part of the webinar, which is about FIDA and the true introduction of the open finance concept. But Andrea will run you through this, and especially the calendar and the uncertainties of FIDA. Andrea, over to you.
Yeah, thank you again, Marine. Sanguine concept. FIDA, or Financial Data Access, is the third pillar of the regulatory package following PSD2 and PSR. Its ambition, as we know, is to go beyond payments, enabling structured access to all types of financial data. It means savings, credit, insurance, pensions, and more. But since February 2025, as we see in the slide, FIDA has faced a strong opposition, especially from the insurance sector in France. Specifically, concerns were raised about the high implementation cost and limited short-term business value. The opposition was so strong, leading even to rumors of cancellations. However, in March 2025, discussions resumed under the Danish presidency, which could lead to a new version for FIDA. It's probably a simplified framework centered on use cases with strong customer benefits. Trial took place on the 1st of April. Another session is planned in June. It's quite likely that the FIDA will still be voted, but deep negotiation could take place. So let's see what will happen in the end. For banks, FIDA creates two dual challenge. Two biggest challenge is the one on the technical side. As you can imagine, new APIs will need to support standardized access to a wide range of financial products beyond payments. It means mortgages, insurance, as we said, investment. And this will involve exposing new types of data. For example, balances, loss conditions, reimbursement flows, contract types, as shown on the left side, for example, of the slide. Instead of on the organizational side, banks need to join and comply with self-regulated industry schemes. Those schemes will be in charge of defining the data governance, for example, the monetizations, or dispute settlement mechanism. Banks had also to adapt the risk management processes and frameworks, for sure, and contractual models. So, I mean, it's a challenge in order to match these two sides of the topic. These schemes will remain optional for now, but the Commission could intervene if industry coordination fails in the selection of those schemes. They will also need to ensure mandatory representativeness up to 25% of market share threshold. And it's easy to think that the entire rollout will be progressive. It means by product, probably, with a timeline between 42 or 66 months, depending on the sector. In conclusion, to succeed, banks must do two main things. The first one is mapping their existing data infrastructure as a key point to move on. As a second step, identifying the key use cases where open data could bring real customer value. So these are the things where banks need to focus their attention in the short term.
Well, thank you very much. And I think it's definitely clear that we need to keep an eye on FIDA because it is not abandoned and will probably come into life. Under which form? Still to be decided, but we will monitor that for sure. Now, if we wrap up our webinar of the day and go back to PSR, because we talk a lot about PSR today, is how to anticipate PSR and why it is so crucial to anticipate it. So PSR, I think we've repeated quite a lot during this webinar. It's only 18 months. Which is not a lot because you need to understand the impacts and make the gap analysis and define a strategy to implement and close those gaps, and then implementing them actually. It's really, really not much time to do all of this, considering PSR is more than 100 articles. And we just discussed about around 20, 25 of them, which are the one driving really the 7.5% sanctions, because it won't be all of the articles. So how can you anticipate? Well, what we believe and what we offer is really a flash audit framework. So we anticipate the risks and we speed up compliance. So it's around 1 month duration. We divide it into 3 phases. The first phase is about training and raising awareness, because what we notice is that not so many employees of banks know exactly what PSR is and how structuring it is, especially, for example, in terms of fraud, in terms of UX with the permission dashboard, and then understand the documentation that exists, the gaps, and so on. So that's first phase, about really informing and collecting information. Second phase is about the audit itself. So what we propose is to focus on those areas that drive the 7.5% sanction. So exactly the one we described in this webinar. So the APIs, the readiness for the permission dashboard and how data is managed, but also customer protection and fraud, because again, fraud is really at the core of PSR. And then come up with a final maturity scoring with the first high-level roadmaps on those key areas that banks will need to look after, maybe invest sometimes some resources into it to close those gaps. So it's a very comprehensive approach, very fast, very quick, enabling to have a first glance even before the regulation is voted. And we believe it has value considering this 18 months deadline and 7.5% sanction, of course. Now, during this webinar, we've talked a lot about compliance because this is a real emergency, of course, with all the risks that are coming end with this. However, beyond the constraints, there is an opportunity that we should not neglect, because greater APIs and optimized APIs and governance, it's good for IT system modernization. It's also good opportunities to connect to the ecosystem and to boost business models that we've seen are being quite successful at the moment. For example, banking as a service, when the banking services are embedded into non-banking players, or banking as a platform, when the bank decides to offer services that go way beyond banking services, like home renovation, for example. eSIM, Revolut is really good at this. So it's really a way to tell you that, yes, it's a constraint. Yes, there is a risk, but there is also definitely room to turn it into an opportunity. And this will be even truer with FIDA, although we don't know at the moment exactly what FIDA will bring to us, because it's still in discussion. So thank you very much for listening. Now we will take a few questions out of your questions. So the first one is, can permission dashboards truly give control back to users without complicating the experience? Maybe Olivier, if you want to say a word about this one.
That's really why we did the prototype, actually, is to really explain the impact on the customer journey and the customer experience. And I hope that you saw that it's not, it creates a bit more, you need to enter a bit more information. So it's a bit more complex, but it remains fluid. I mean, that's something which is really acceptable with this objective to provide more information to the customer and give him the control on its permission. So I think that indeed there is maybe a bit more complex, but it's really acceptable. So in my point of view, we can.
Yeah, I think maybe one point that is still interesting and that we also illustrated in the prototype is that for the customers, it's not always easy to remember to who he actually granted the access. Because, for example, in the examples that we showed, it was Finery, right? Like the provider of the dashboard. And so for the customer, he had the impression maybe that he was giving permission to Finery, but in the end, because Finery was using Tink as a TPP, then Tink was actually displayed in the permission dashboard. And there was no way that you could actually see, I would say that it was Finery at the end of the process. So that's maybe here that the friction can come.
And that's there where the concept of purpose is important, because that's where we should be able to explain to the customer the purpose of the permission.
Yes, but let's see how it's going to go and how much information we could get. Second question. So how are we going to communicate with the TPPs as we have no contact details, technically speaking?
So there are indeed some interactions that are required with the TP. I guess the question is, I look at the question more from a technical point of view. Typically, when you revoke a permission, you need to inform real-time the TPP about this. Indeed, we are still expecting some implementation acts or equivalence of RTS for PSR, which we don't have yet. But I guess that, the usual suspects, if I can say that, like the Berlin Group and so on, will come with this kind of standards.
Yes, definitely. Yeah, I think it's a lot more to come, which is why 18 months is really not long, actually, because implementation acts, we don't have them at the moment. So, and it will bring for sure more information. Other question on FIDA. So FIDA seems to be on hold. So what can banks do now without risking a premature investment? So definitely, our recommendation at the moment is really to do the regulatory monitoring, because indeed, so FIDA, as Andrea explained, went back to the trialogue phase, meaning that it's still in discussion at the European Union level. So the last version of FIDA dated back from December 2024, but then we had rumors of cancellation, which actually weren't true. But now still we have this willingness, which is, I would say, European willingness that is quite generalized at the moment to try to simplify, to enhance our competitiveness, which was also underlined with the Draghi report for those who read it. So definitely it will change a lot. So what we recommend at this stage is monitoring. In any case, FIDA also introduces the concept of permission dashboard. So what you do for PSR is useful for FIDA, because if you understand how you categorize your data, if you do the permission dashboard properly, those will all be things that could be reused, probably API standards.
That's the same indeed for API standard, because this opening of the system of the bank by publishing API and by standardizing API, that it's the first step with PSD2 and now with PSR, will be the same approach for FIDA. So if you set up some tools like API Gateway or this kind of stuff, that will ease the move to FIDA and is already useful for now. And as you explained, for an open banking and benefiting of the ecosystem around the bank, that's something that makes sense already or today.
Yeah, so what we recommend is monitoring and preparing well for PSR, and that should be good. And we will have more information in 2026, and there it will be time to start seeing how we could implement similar flash audit as we presented also, and technical approaches to FIDA. So that's it for today. Well, thank you very much for listening to us. It was a pleasure having you today. And let's keep in touch about those fascinating topics of open finance in the future. Thank you very much. Bye.
Thank you.